Hello, welcome back to the Technical Analysis playlist where we learn how to trade from beginner to pro. Today we're going to explore 3 types of charts that we traders can encounter. As traders, our job is to assess probability and to manage risk. And this is where charting can really help. A chart is simply a visual representation of a currency pair's price over a set period of time. With a chart, it's easy to identify and analyze price action, price movements, chart patterns, and tendencies. These are all very useful things for us as traders when it comes to predicting where price is likely going to go in the future. A trading chart shows changes in supply and demand, every buy and sell order, so every transaction, news, and all activity from traders, AI, hedge funds, and so on. A chart will blend all of this information and represent it in a picture that is easy for us traders to understand. On a trading chart, we have y-axis and x-axis. The y-axis is a vertical axis and represents price scale. The x-axis is a horizontal axis and represents time scale. Prices are plotted from left to right, the right being the most recent price. Did you know that back in the day, the charts were actually drawn by hand? They were drawn out by hand. Can you believe that? It's crazy, isn't it? Luckily for us, Bill Gates and Steve Jobs came around and made computers accessible to everyone. So now, trading charts are magically drawn by software. And just to clarify again, a chart will blend all activity, whether it's from humans or from algos. Everything gets incorporated in the chart, including news, market sentiment. Everything is shown on a chart. And so we can use a chart as traders to predict future price action, but also to study how prices behaved in the past in order to predict where price is likely going to go. We have 3 types of charts: a line chart, a bar chart, and a candlestick chart. Let's start with a line chart. As traders, we like to use line charts to get a general overview of the market. A line chart doesn't add those tiny little details on the chart. As traders, we'd use a line chart to get a general idea of price movement of a certain currency pair over time. A line chart will draw a line from one closing price to the next closing price. So it will not reveal the details of price behavior within the period, but it will give us a general overview of price movement. This type of chart is usually used to get a big picture of the market situation. A line chart is also very good, especially if you're a beginner, if you're just hunting for trends, as it will remove all of the in-between and it will just keep what's necessary. If you have a look here, we'll take a traditional candlestick chart and we'll switch it to a line chart. And now you can see how much easier it is to identify a trend. Many traders consider the closing price to be more important than the fluctuations. And so these kind of traders will have the tendency to use line charts quite a lot. Let's move on to bar charts.
Oh yeah.
No. That's not what it means. A bar chart is a chart that represents the OHLC bars on the chart. And so as we've seen in a previous episode, OHLC bars represent the open and the close very clearly, because you have the stick and then you have the open and then you have the close. And so if that's what the trader is very interested in knowing, where the price is open and closed, if the trader wants to have that information on the chart, then that trader will use bar charts. Also, if a trader would like to get a good overview of volatility as well, because you can see the open, you can see the price movement, and you can see the close. It's very clear information on the chart. What the downside is, in my opinion, is that the chart can look a little bit messy. And so that takes us to the next kind of chart, candlestick charts.
Yeah, but wait, I think we need to clarify what a bar is here.
Absolutely. A bar is simply one segment of time, whether it's a minute, 5 minutes, 10 minutes, an hour. Some charts have 2-hour bars, 4 hours, a day, a week, even a month. You can have all of that information contained in a single bar. Now on the chart, you can choose whether you'd like to have bars that represent a minute, 5 minutes, and etc. and so on. So if you'd like to see how price changes every minute, then you'll have minute bars on your chart. If you'd like to see how price changes every hour, you'll have hourly. If you'd like to see every day, then you'll have daily. And so the more amount of time contained in a bar, the more zoomed out you'd be on a chart. And so it's very useful to be able to choose these things ourselves, depending on our trading strategy. We'd go for lower time frames, which is 1 minute, 5 minutes, etc., or higher time frames, which is a day, a week, a month. Daily, weekly, and monthly bars give us a broader view of price action as it contains more time within the chart. 1 minute, 5 minute, 10-minute bars would be more of a zoomed in view into the chart and more detailed information of how price is moving within those time frames. Can we move on to candlestick charts now?
Say what? Oh, yeah, go for it.
I hope that's not rum, all this bar talk. Candlestick charts have candlesticks on the chart, not OHLC bars, but candlesticks. So it's like similar, but with different kinds of bars. Candlesticks show the same kind of information as OHLC bars, but they're just prettier. And they're easier to read. Not for everyone. Some people do prefer the OHLC bars, but in my opinion, it gives you a cleaner overview on the chart. Another upside of using candlesticks is it's easier to identify chart patterns. And if you're using colored candlesticks, then you can clearly see if the bar is red or green. So if it's closed higher than it's opened or lower than it's opened. Candlesticks give beautiful information on where price is likely going to reverse. And you also get super cool names like Doji Bar or Shooting Star. We should have a to the moon candlestick, shouldn't we? That'd be cool. That's like a crypto specific candlestick. There's also candlesticks called yeah, there's some weird names, but it's fun. It is fun. You can have a lot of fun with candlesticks. Now, I know I'm shitting candlesticks here because that's what I use, but I just find it easier to use candlesticks on a chart because it gives you a very clear representation of price. I've got 2 videos out on how to read OHLC bars and candlesticks, so make sure you check those out for more information on that. I won't cover that in this video because it's about the charts. Okay, and I'm trying to not get too carried away because I do that quite a lot. We're going to stick to the point in this video. We'll just stick to the point, okay? Stick to the point. Yes, just let me film this video. Okay, you can say something, fine.
Oh, thank you. Did you know that traditionally, before the colored candlesticks were either filled or unfilled. And since we didn't have night mode back in the days, just a white computer screen, the filled would be the black, and the unfilled would look white because they were just hollow, like they had no color. Would you agree that that is really unappealing? So nowadays, instead of white, we have green, and instead of black, we have red.
I guess that was worth saying. If you like fun facts. I'm trying to keep this video short.
Well, if you like fun facts, you don't want to hear a funny fun fact? Well, my voice isn't really like this. It's just like I put my glasses on my nose and it squeezes it, and that's why my voice comes out sounding like this.
Irrelevant. Anyways, here is a candlestick chart. The purpose of candlestick charting is purely visual. It's just visual. Because an OHLC bar chart, so a bar chart, is representing the same kind of information. Just some traders find it a lot easier to read candlestick charts because of how they're presented. And as I said before, it's easier to find patterns within these charts. And these kind of charts just look a bit tidier, easier to read at a first glimpse. Now, not every trader would agree. Everybody is different, and so you need to choose which chart works best for you. It is widely responsible for you to do your technical analysis on either a bar chart or a candlestick chart. Not on a line chart, because a line chart does not provide the details. It only provides the closing points, as we said before. A line chart will give you a shortcut to identifying trends and general price movement. Candlesticks are 100% my recommendation for beginners who are learning how to trade, as your eyes can easily adapt to what is being presented to you on a chart. And as previously mentioned, if you want to make the most out of your technical analysis, then it's always useful to be able to identify the turning points in the market. Reversals from an uptrend to a downtrend, from a downtrend to an uptrend. If you can identify these key areas, then you can make a lot of money. And that's what we're here for. That's why I mostly trade on candlestick charts, and we'll be using candlestick charts in the tutorials moving forward. I suggest as a beginner you play around with all three and figure out which one makes the most sense to you. That is it for today. Remember to leave me a thumbs up, please, on this video if you liked it. Subscribe down below. Leave me a nice comment or some constructive feedback if you like, and I will see you in the next video. Bye bye!